Welcome back. We've been speaking with the Chief Economic Advisor, Dr. Anant Nageshwaran. Well, Dr. Anant, we were speaking about FDI having dropped off a bit, and your point was that it could be because globally interest rates rose. Now, Citibank has done some research on FDI in the PLI sectors. And even that, after jumping from about 4 billion in those sectors to about 7 billion in FY21 and 22, again has dropped off in 23 to about 4 billion. I mean, going back to the pre-PLI period.
Right.
So does it worry you that we may be getting something wrong in manufacturing itself, that people are not getting interested? Will the government think of any policy tweaks in PLI or generally in
it is difficult for me to provide you speculative answers on this point, because we also should not be reading too much into one quarter or a couple of quarters of data when there are so many other factors that are also happening simultaneously. Purely from a logical perspective, if everything remained constant and this was happening, then you should be worried whether this is the only factor that's influencing this kind of drop off and so on. But you also have lots of other things that are like other moving parts, rate hikes, global uncertainties, commodity prices, and war, and overall. And then there was a reopening in China post-COVID, so there will be some attention focused there to see whether something needs to be topped up there, etc. But also, what we are picking up anecdotally is that there is clearly a lot of planning and thinking going on in realigning global value chains, etc. And India figures very prominently in those discussions. That is why I would not read too much into this. While certainly we need to keep an eye out for it, and whatever we need to do to make investments in India a worthwhile proposition for investors, domestic or foreigners, we should continue to do that. There is no getting away from that. But I would distinguish that from reading too much into near-term data.
Yeah, then I'll just add one more data, which I think is worrying in terms of our manufacturing performance. We have been trying to emphasize manufacturing. Services are doing well. Let's concentrate policy action more on manufacturing. Look at the GDP data on manufacturing.
Right.
That's also 1.3 for the full year. Yes, fourth quarter is 4.5, but that comes off a 0.6% base.
Yeah, absolutely.
So we're getting it wrong in manufacturing somewhere.
I mean, I agree on the data, but I disagree on the conclusion you are drawing. I mean, second and third quarter were bad for the manufacturing sector in the GDP data. And first of all, our quarterly data are not seasonally adjusted. That's fine. But then you look at the PMI indices on manufacturing, they are at a 31 or 34 month continuously above the expansion zone. And I think, again, if you look at the last calendar year or financial year FY23, commodity prices and interest rates and input costs went up tremendously. And manufacturing, therefore, would have stepped back, and they would have also probably been cautious about running up inventories if demand was going to be weaker. So I agree that that is something we would look forward to seeing pick up substantially, given the strength we see in the PMI data, given the strength we see in IIP data, etc. But I don't think I would reach the conclusion from there to say we are getting it wrong.
Now let me come to the one where we are doing very well in services. Whether we look at the GDP data with the financial services, 14% I think for the full year, and if you looked at exports, services exports, non-software services exports, absolutely an eye-opener. I mean, it's not 200-300% is where we are going year on year. Do you think this is good to go? And is the government looking at,
No, this has happened because over the years of investment in our capabilities and, our skilled population, education, etc. And it is no longer only about software services. It's about even legal services, accounting, risk management, compliance. Everything is happening from here. And I think whatever the government can do to facilitate it, the government will be doing it. I don't have specific answers to your question, specific measures in mind.
Expect that
I personally think this global capability centers, apart from software areas, is something that has just begun. Okay. And I think I do see services as being an important mainstay of our export basket.
Okay, so a big runway, you think?
I think so. I think the path ahead is quite bright, and it will continue to provide great sense of balance and stability to our external data.
Okay. I'm being warned I'm out of time, so let me ask that one tricky question, which is not really macro economy, but something that niggles, and you wrote about it in the Indian Express. This 20% tax collection at source. it does seem like it is too much of a pain in the neck for, of course the money will come back in advance taxes or whatever, but you're punishing someone who's paying their tax well because you've not been very successful with the evaders. Is that even fair? It looks penal at 20%.
No, the government has heard many of these concerns being expressed and the disappointments, etc. The government is cognizant of them. I think the government will come up with a response. They already are coming up with responses exempting income spending up to a particular
7
level,
lakhs.
7 lakhs, and that may even and also it may also lead to further improvement in the process of linking TCS to TDS, which will then completely take away the concerns.
It's not definitely.
It is not going to be happening quickly because it's a technical issue.
Yes.
Some technological interventions have to be made to make sure that it is seamless. But once that is done, then people will not notice. They will
not
shrug their
complain.
shoulders and say it's going from this or this. Totally, I'm not being hit additionally, etc. So I think the government has definitely heard all these concerns and disappointments, and they are working on it.
Thank you very much, Dr. Anand Nageshwaran, for giving us time, and we take back this positive takeaway that the government will persist with capex and that it is also thinking over the tiny niggling problems
Yes,
that we have expressed. Thank you so much for joining us.
You're welcome.